Hey everybody, Economic Ninja here. I hope you are doing great. I'm doing great. Why? Because mortgages are going up. They're getting more expensive, and that's good news for people that have been waiting on the sidelines. I get it. A lot of people are very frustrated. They're scared sometimes. They want to FOMO in because home prices keep going up, but this is exactly what happened in 2005, 2006. Now, with that being said, we've been talking a lot about this on the Economic Ninja. If you're new to this channel, guys, think about subscribing and hitting the like button. Well, you don't have to like it. You don't have to like this video. Not many people do. But my point being is if you do want this kind of content, because it is different, because I was a real estate investor way back in the early 2000s, actually started in 2001, started to liquidate all of my real estate mid 2005. I was out by mid 2006. And then the crash happened, right? But the crash didn't happen in 2008. It actually happened before. It happened in 2006. And the bottom wasn't found until 2011, 2010, that area. So if you think about it, you're going, oh, Ninja, whoa, you mean I've got to wait 5 or 6 years? Well, I'll be honest with you. A real estate downturn does take multiple years to get to the bottom. However, there's always deals in pockets, depending on where you're in the country. But also think about this. It's very hard to time the bottom or the top, right? You always have to buy real estate that works for you. But remember that just like 2000 or unlike 2006, there's a lot more money in the system, a lot more derivatives. This makes 2006 look tame compared to where we are now. So I want people to understand that. So can this happen a lot faster? Yes, it can. Can rates shoot up faster? Absolutely. And you guys, I'm going to show you this right now. 30-year fixed touches 4.9%. Yes, that is the Ninja's phone. And if you notice here, the 30-year fixed VA, 5.1%. That's absolutely horrible. And why is it horrible? Because I believe that our veterans should pay less. But I want people to understand this. The reason why a 30-year the VA loan is more expensive at 5.1 is because the banks are pricing in risk. You see, with VA loans, you don't need to put down a down payment. There's a lot more leniency for getting loans, which I love, because I think the military deserves that and more because of what they have done for our country and for my freedoms. I absolutely thank you guys so much. But with that being said, banks are pricing in risk. And so they're saying, hey, if you're not putting down a down payment, we should learn how to turn off the cell phones. My point being is that the reason why they price in the risk, because hey, if you're not putting in a down payment, then we're going to have issues. Now, let's go ahead and turn this thing off right now. I can't even do it. The phone call's in the way. If it's you calling me right now, you know who you are. I'm on my way to a party for work, and I'm making something very, very special. It's made with tomato juice, and there is an olive and celery. So that's all I'm going to say. That's what I'm supposed to be bringing to the party. So I actually just, now that I said that, I forgot the celery. So guys, we're getting into the real estate. So we saw the real estate mortgage prices. They're moving up. They're moving up crazy. Banks are pricing in risk. This is getting serious. But we're going to talk about a story here. And this is something that I told you guys about 3 months ago. I said you'd see it, but I believe you're going to see it much worse in another 30 days. So here we go. Let's share the screen. And it's entitled out of CNBC. I'm going to link the story below. Mortgage rates are surging faster than expected, prompting economists to lower their home sales forecast. What? Wait a minute. But Zillow said it's going up. It's not going to stop going up. It's going up like 20% next year. No, Zillow, you're wrong. You can't go up when interest rates go up, because for everyone that thinks this place is a crazy market, it's actually not. There's less homes being sold right now on a month-over-month basis than there were a couple of years ago. Why? Because inventory has collapsed. Why? Because people don't have money to sell their house and move up. I hear it all the time now. I'd love to sell my house for $1.5 million right now, but why? I couldn't afford another house. And not only that, if I move down the street and I bought another $1.5 million home, not only is it the same home, but I get to pay more taxes on it because it got revalued at a higher rate. The point is, we're getting ready to collapse, and boy, are we going to. And remember, as fast as this market goes up, it can go down too. So let's jump into this story and talk about it. We're just going to go over the key points. The average rate on a popular 30-year fixed mortgage hit 4.72% on Tuesday. So I think my numbers are a little bit higher. And remember, guys, those mortgages, a lot of them are asking for points now. It said moving 26 basis points higher since just Friday, according to Mortgage News Daily. Then as a result of the recent spike in rates, economists are now lowering their home sales forecast of the year. Hey, I get it. The economists that are doing that right now have not been watching the Economic Ninja, but why don't you just jump on board? It's going to be fun. We're going to put the fun in collapse, even though there's no FUN in collapse. And why? Because you can't stop it. This is human emotion at its finest. That's what drives prices up in any market, and it's what comes collapsing down. That's why today you still don't see collectible Beanie Babies. That was just a thing of the past. If you guys remember Beanie Babies and that price explosion and going into just cuckoo land, put your favorite Beanie Baby name in the comments below. All right, so it also says here, most estimates at the end of last year had an average 30-year mortgage rate hitting 4.5% by the end of 2022. But the war in Ukraine, rising oil prices and inflation all but lit a fire under interest rates. Hey guys, I'd like to introduce you to something. It's called a lie. Just, that's all made up. That's actually not true. You see, right here, it said most estimates at the end of the last year had the average 30-year mortgage hitting 4.5%, but it was already well into the 4.5% in mid-February, before you ever heard anything about Russia and Ukraine. Sure, there was mumblings or rumors, but what I want people to understand is this is what's really, truly happening. And I'm going to put the link below so you guys can take a look at that. And I'm going to talk to you just really up close. Banks are pricing in risk right now. That's what's going on. You don't get this kind of commentary from just anybody on YouTube. Why? Because there's a lot of YouTube viewers out there, and I'm definitely not one of them, but they weren't investing in real estate in the year 2001. They might have bought their first house in 2010. They have only known an economy that is going up, up, and up based on quantitative easing, easy money policies to the Federal Reserve, the government loosening lending standards, all kinds of different reasons, right? But a lot of people have made millions of dollars in just a good time. It's one thing to make money in good times. It's another thing to crush it in the bad times. Why? Because you make more money in bad times because you're dealing with people's fear. And it sounds funny because this is a channel, as much as I joke around, I've been around the block. I've been an investor since 1998, became an accredited investor when I was about 24, 25 years old, made my first million at 25. That's not bragging. I got to give you a baseline. But I'm also that dork, that weird dude that right before the dot-com crash, about 6 months before, I said, I think this is topping. I'm watching all these amazingly smart people that are smarter than me. That's the key. I'm going to get out of the stock market. And I did that. And put my money in the bond market and watch the Dow Jones, the NASDAQ and everything come crashing down. Then I went into real estate. Then I did the same thing. I was a weirdo that said, ooh, we're topping. Mortgage-backed securities are blowing up. Negative amortization loans are absolutely cuckoo. People are buying more than they can afford. That's the key. Just like today when you can go buy a $100,000 pickup truck. And I know lots of idiots are driving those around right now that can't afford them. And I only mean idiots in the most sincere way. Why? I use sarcasm or possibly to frustrate people in a way to try and wake them up. Because today, in this very day and age, we have to shake people. Now, I have this amazing house behind me, right? It's not my house. Guys, it's a green screen. But I'm going to be talking with Vanilla Ice here pretty soon. One of my awesome subscribers has told me he's trying to get me in contact with Vanilla Ice. Why do I want to get in contact with Vanilla Ice? No, it's not because I want to convince him to get his hairdo back. It's because I'm keeping this one. He doesn't get it anymore. But the point is that he had the greatest home flipping show in the world. Now, not many people know this, but I was actually offered a home flipping show back in 2003. And this was before there was ever such thing as a home flipping show. But I was flipping so many homes, we were approached by a group that did this. And I really wanted to do it. Mrs. Ninja, not so much. She just wanted to lay low. But the ninja, he was ready to rock and roll. Give me a saw, a hammer, and a camera, and let's crush this thing. But the reason why I bring this up is because Vanilla Ice, or Rob Van Winkle, had an amazing home flipping show, and it told the story. I hear this all over the time right now like crazy. This time is different because, and you can insert a bunch of reasons, but one of the excuses that this time is different is that, well, people are not as leveraged. They are wealthy. There's more money in the system. They have the money. And see, the sad thing is that most human beings would look at this house and look at the guy that comes out and think, that dude's got it together. Look, he drives a Maserati, he's got it together. But the facts are, you don't know the backstory. You don't know what's behind that house. And behind that house is a bunch of debt. And usually it's just to show off. And the fact of the matter is, most millionaires, and I know multimillionaires actually, multimillionaires. I'm not talking about you got $1 million because your house is worth $1 million. I'm talking couple million or more liquid. They don't dress fancy and they don't live in a house like this. I'm just going to be honest with you. That's just how it works. It's called The Millionaire Next Door. If you've never read that book, it's an amazing book. Go and check it out. But the reason why Rob's channel, is called the Vanilla Ice Project was so amazing was because all he did was flip houses bigger than this, mansions in Florida on the water. And they're all in disrepair. They'd all been left, abandoned. Why? Because all those people that looked rich were not rich. You see, the emperor is caught with no clothes, and there's going to be a day where your economy will be the ultimate emperor with no clothes. The only question is, are you going to be the one that is willing to stand up and go, hey, what are you doing? You're naked. Or are you going to sit back like the masses and be part of the scheme? All right, guys, I hope you got something out of this. I know I'm throwing a lot at you, but you know what? Sometimes you got to use sarcasm to wake people up or to just get used to this crazy, crazy world. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.